Alright, I'm going to look at natural gas here real quick. What I have here, it says it's a 5-year seasonal on natural gas, and basically outside of the February, no follow through there after January. Uh, Basically, the pattern got back on track. Okay, we're coming into a period here. We're basically by into October. Okay, then there's the part where uh, things don't pan out that way. Say the weather, what do they call it? Indian summer kind of deal. All right. And then we take off again into the new year. All right. So you basically start getting long. I think I posted on somewhere, Stock Twit, Stock Hoot, whatever, um, uh, where I uh, got long UGAS just recently here, about a week or so ago. All right, and then hold on through that basically through into October. Um, Judging by the way that soybeans panned out this year, I guess we didn't get a drought in the Midwest. I'm not living in the Midwest anymore. I lived there for 35 years. You know the weather, the cold winter is on its way, and the hot summer. So this is Natty gas. This is found on TOS. It says chart mode seasonally. Okay, so standard. All right, getting back to standard. This is a 2-hour one, so we're probably this area here, the POC area where there's most trading. This will probably hold Sunday night, that kind of thing. If you're lucky enough to be able to buy back down in here, 73, 74, we'll say. Then the next move up would be back to the 384 level, and then there's one up here shy at 292. What's this one here? 285. I think it was 284 to 288 is a band area. This is whoops. This is on the 2-hour chart. Take a look here at the daily. Okay, so basically I just have different sets of linear regression lines here that I actually use for day trading. But here you can see that the POC area, this is going back for 1 year. So there was a bounce down to down here, linear regression bounced off the bottom up there, then immediately went straight to the top, and then we were doing the sideways thing again. Okay, so but we're trying to break out of this area going into the seasonal here. So I'm clearing up in here, 330 again. Then you're off and running. I think on a weekly, let's see if weekly helps out at all. Weekly, not really. So then we'll switch over to monkey bars. Okay, so here's a weekly. All right, you can see where there's a support level here for this entire year. Okay, that's interesting. Hopefully I'm still recording. Alright, yeah, I'm using QuickTime now. Alright, so you can see going back 15 and 16, a narrow band, we broke on through, up, and came back into this area. So this seems to be a happy place. So basically a bunch of years of accumulation going on here. Lopsided orb down here. So clearing 3, you should be off and running. 330, 360. And then just a shy under 4, and then that's a different story. Then I think you go 440, 460, and then 540. But when that time comes, then I'll go back and see if we can do a monthly on this here. Just go back even further, probably not. Just not that lucky. Nope. We'll try monthly. How's that look? There we go, a little bit better here. So this is a monthly going back to 09 and that. Okay, so you can see it's about 415, 420, yeah, 420 area. These are all happy places. This is where all the little people are all happy. And this is our 17-year low down in here. Anytime I hear anything on the TV that we're at a 15, 30, 20 year, whatever year low, I'm all over it. Especially for commodities, because typically commodities don't go to zero compared to the majority of stock. Lifespan of an S&P 500 company is 14 years. Okay. Yep. So basically just kind of breaking over. Well, we have to get up and above it here, but once you start clearing, we'll call it 330. Then we should be off and running again. Now they're going to aim if they can get over. If they can swing up to here, they're going to aim for the higher numbers up here, and of course it goes way up to $16. I think way up in here, or the year previous to this. Can I do 20 years? Is it that nice to me? How about 15 then? You scrunch it. Oh, you can. You give me a little slide, or oh, you're too kind. All right, yeah, 16 over here in '05. So that's on the way up. But basically, you can see that this used to be a happy place up in here, 6.5. So we're talking a double. But basically, what I'm going to assume for pumping natural gas is that, I think when they're drilling for oil in North Dakota, a third of it's flamed, natty gas. They just burn it and put it straight in the air. So basically it's worthless, but we won't go into Bitcoin. Here it is right here in my hand. What is the Bitcoin? You're taking from it, but there's nothing there. That's, yeah. Okay, so, yeah, how did the RFID tags work out? Okay, basically the same thing, but just electronic. They worked well on dogs, I guess, huh? Alright, so, but that's basically about it. I wanted to look at natty gas, and then I think on my other chart, yeah, here's natty gas from the Moore Research Center. I'm looking at this just this huge, like here you had a long 8-9 year period of sideways. I look at you have some spikes, but just look at it as a sideways, and then this is where it, was in a bull market. So basically, once again, between 6 and 2, that's 4. That means the target would be up to 10. If you take a sideways, because it's a measuring pattern. Like I said, just seasonally we're due for a swing, and it's tight. So a lot of the other commodities are going to be coming off outside of the strong dollar. We have trying to work on World War III. The tariff deal will pass with the stronger dollar once we get going on that. Friday's GDP number came in hot, but lower expectations. But that everybody's filling up their warehouses before this comes through, and the tariff money, of course, should go to the Treasury, right? Wrong. All right. I want to see where Hogs. Okay, Hogs came off. Safeway and Albertsons were offering racks of baby backs for $5, and I was kind of shocked that there were maybe the loss leader. I don't know. I don't follow the individual commodities. Like a certain sector and stuff. I can just look at a chart and go, okay, here's where we're at. It's headed lower, things of that nature. Soybeans, back to 650. I thought we'd get something here for a drought or that, but I guess that game is over. This was a drought year. This was El Nino, drought year. Here was an interesting one in 1980. Besides the drought year, we also had Russian grain embargo, and they didn't come to the Olympics, and we didn't go to theirs. Take that, Brezhnev, right? Yeah, whatever. Okay, so what we did, in a sense, and I think that's what we're playing, the game we're playing now, I think, with handing money to the farmers. We always hand money to the farmers. That's just how it goes. The farmers get $500,000 every year to plant seed. It's one of those things, that's money comes out of the ground, jobs, blah, 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 yada, yada, yada. It's either weeds or something you can sell. Or weed. All right, so here back in 1980, we had a grain embargo, so we weren't selling directly to the Russians, so they had to go through Rotterdam, basically, we'll say a black market type deal. And of course, there was constraints on supply, and also the drought came through too. And then after that, we got to be friendly again. But also the Russians were part of the Great Depression. As prices were falling, they flooded the market with wheat. and it just exacerbated the problem, the issue. So, and a lot of these contracts are settled in cash, so you don't even have to cut. You don't even have to flood the market with wheat or whatever anymore. You just throw money at it. Uh, but I think I haven't looked at some of these for a while. I've been trading mostly currencies. That's why I'm not posting as much, because I had to go back to trading instead of teaching. So you can only do one thing at a time. You either can trade or you can teach, per se. Opportunity cost, one or the other. I can't sit and analyze and then post it and then trade it. I have to analyze it and trade it. Maybe, but hey, you get what you get, right? Soybean oil, corn. Alright, so outside of any harvest deal, I'll look at the commitment of traders tonight. Yeah, pretty much game over all the way around. Okay, so if my numbers are right, the next secular cycle in commodities, is it 2031? Yeah, because we had a peak in 1980, and then we had a bottom in 97-ish area. So that was 17 years. And then we had a peak in 2011, so we'll say 17 years is 28, and that would be 4 years after the real estate bubble. So 7 years, 24, 31, yeah. So somewhere between 2028 and 2034, we'll get the secular cycle. There will be other cycles in between. This Minneapolis one, this one was real interesting. I was in town, and these guys came into the bar, and off whatever, off. Well, they're farmers, so they go on vacation when it's off season. All right, so they come into the bar, and I'm talking to them about commodity trading and stuff, and let's just call it a restaurant. And all of a sudden they go, we called around 300 miles plus, and all we found was 30,000 bushels of wheat. The guy says that by Friday, I think this was a Tuesday, by Friday, wheat's going to be up $4. Well, I'm not playing, last trading day games. You can't buy options, and this is basically somebody who just couldn't hold on to their short position. This also happened in coffee, too. Oats usually lead the way. Minnesota's the #1 leader in oats. Eat your oats. And then rough rice. 2/3 of the planet eats rice every day. If there was gonna be any type of issue with rice, that would cause some issues overall. Canola looks like a hard short, looking where soybean oil. Yeah, looks like a good one. That one's gonna probably run down into this area, 3.5. Sorry, Canada. OJ, yeah, that's a seasonal game. Sugar. Okay. Coffee. Was this the guy that got pinched? Somebody got pinched in here. Didn't put in their stops and lost billions of dollars. Glencore. Oh, I should look at the Swiss franc. It's probably going to fall apart. Cocoa. Lumber. Well, that's not a very good sign. Yep. Wait to buy your home. Cotton. Or was it cotton? Yeah, it was cotton, not coffee. Cotton, yeah, that's right. Glencore, yeah, he wouldn't get out of his shorts, and they ran him until they pulled the plug on his billions, and then Glencore had to go from London to Switzerland. Run, Forrest, run. Goldman Sachs Commodity Index, and signing up. I think this stuff is it $50 a month? Yeah, whatever. Yeah. So basically, I just wanted to point out Natty gas real quick, and I'll give you a bonus here on the Swiss franc. Yeah. All right, Swiss franc. Where are you, buddy? Swissy. Everybody's getting dizzy. Oh, crude. Whatever. You're going to $16 a barrel. Brent. Where's Brent headed? Same type of deal. Between 20 and $40 a barrel. I'll stick with 40 then. 40 and 60. 40 works. I'm going to say 40. Okay. Monthly dollar. Mexican peso. This is an interesting one. In Mexico, that one looks like it's going to turn around, which works, which means that their higher interest rates for carry trade is actually working. I don't have a chart for Turkey, but finally that's working for Mexico. Australia, that one's a bear flag. Canadian dollar looks like a bear flag, plus their commodity is going to fall apart. British pound. That's a pretty good move, 120 to 140. Thank you, Kevin. You're welcome. Japanese yen. That one should be going the other way. Okay. The dollar didn't carry all that. So euro. Alright, yeah, Swissy here. Laying right here. It'll fall through. Glencore and all those, all the commodity moves right here, right? Went through Switzerland. Whee! And now we're going to unwind the commodity, whatever folks are left. Whee! On the Swiss franc. You're welcome, people. Copper. Jeez, I want a $1.50 written all over it. Yeah, palladium. Yeah, just bash palladium in something fierce. Just, yeah. Kill. Platinum's already rolled through, or about to. Silver also. I mentioned being, obviously you don't go against the trend here. Obviously the trend has been down for 7-8 years. So, but short term, I think the commitment of traders is kind of lopsided. And we're going to probably pause here. People are going to be probably running into cash here when equities roll over, and that should drive, we get some bounces in this paper and then fade it. Unless, of course, the bounce is going to start prior to the recession. We put 2s in here, 10s. Alright, so we got 2s, we got euros. Overnight money. I should check on that commercial paper. Should hit a trend line here. Maybe that's what we're going to get. And then I think VIX is targeting 16, right? Open, high, and low. This is 18. July stats. What was I looking at? That was 16. Oh, VIX futures. Okay. Oh, that's monthly stats. That's right. Open, high, low, close. Where's close? 13. Okay, so we're going to head to, I thought it was 14. Whatever. We're going to head, VIX futures should head to 16 here. So I'll go look at the commitment of traders and do another video for you on stuff that I find. Probably going to focus some of this on this Russell here, because it looks like the NASDAQ kind of poked through and reversed here. Oh, we're coming to the end of the month too. Cute. Well, we're going to see if we have some monthly reversals here, aren't we? And we have Tuesday. And once again, here's the head and shoulders on the DAX and the Nikkei. Poor thing. What's that peaked out? 88, 89. 30 years. Utilities, how did they handle the 70s? They were stuck sideways too. We had a strawberry moon. I guess we just had a blood moon, but there was a strawberry moon when Nixon was elected, and we have a strawberry moon when Trump was elected. And so I'm playing basically the stock market as 67, 68 kind of thing down to, I think it loses half. I think it was 2 bear markets during his, we're down, usually we only have 1 a decade now. We're doing pretty good here, but I think things are just a skosh messed up here. There's the little people, you can't bail them out. I mean, you can throw money at them all day long. We threw student loan money at them. We thrown, you're going to have to drop it from helicopters, and that's exactly where we're going to get our inflation from, but that's what it's going to take. The last time we handed out money, I think we handed out, $400, and everybody just paid their mortgage, so we just gave it to the bank. But that's how it goes. That's capitalism. So, that's how it works. Just put the money there, find the entrepreneurial talent, we have the labor, and go to work. So there you have it.